Let's just jump right into real estate, man. What is your take? What are you seeing the temperature of the real estate market in the United States right now? How are you feeling about it?
I think that we just left one of the best selling opportunities over the last 2 years for
Mhm.
people to cash out newfound equity in their properties. I think that there's been a couple of things that have happened that have allowed sellers to really capitalize on the environment. One of which is all the lockdowns. You saw a lot of places like California and New York where there's a high cost of living. These high incomes are flooding to locations such as South Florida, where I am right now, into other areas where there's just been massive appreciation. People were able to go from like a $4 or $5,000 a month rental in New York City or LA to go buy an 800,000 or 900,000 or $1 million property here.
Mhm.
And so there was an awesome time to be a home seller. And at that same exact time, people were so scared of inflation that when you had the opportunity to invest and borrow money at 3% fixed over 30 years in an inflationary environment, people were willing to overpay. And so if they were paying $100,000, $200,000 over asking price for them, it wasn't that big of a deal to be able to have that great investment and then also have that hedge against inflation if they're going to be in that area or that house for a long time. And so a lot of people overpaid, I believe, for real estate.
Yeah,
And all,
keep going, John. I'm sorry.
and especially in the multifamily sector as well. I have friends that are commercial real estate brokers in Los Angeles. And they're saying a lot of my clients are cashing out, doing 1031 exchanges, selling their properties, and going places in South Florida. And they were willing to overpay for properties. And in South Florida, cap rates a couple of years ago were 5, 6, 7%, to where people would, what a cap rate is net operating income divided by purchase price. So what that means is if you paid all cash for the building, the actual return you'd get,
Mhm.
right? So $1 million property, hypothetically, a 5% cap rate would be $50,000 a year, right? 5% return. So now what ultimately happened, there's so much money flooding here with the low interest rates, everything that was happening, and rents were skyrocketing, that people are overpaying for property. And these commercial properties, you're gonna have to refinance them in a couple of years. So you're gonna have all these people that overpaid for property. They're gonna have to refinance their property potentially at a much, much higher interest rate as rents start softening up and insurance prices are continuing to rise. It could be a problem for some investors. So
Hmm.
I think we're gonna see a lot of change coming.
So, talking about South Florida, do you see the South Florida real estate market? Is it cooling down any, or is South Florida real estate kind of disconnected from the rest of the United States real estate market at this point?
So some markets I feel like are still trying to hold on, but some markets are already seeing an impact. Like you look at San Francisco, you look at Austin, Texas, you look at some of these tech hubs. We're starting to see a lot of change there. So a couple things that are really unique in the job market, especially the last couple of years, that I think have fueled the real estate market as well, kind of through gas in the fire, was people were renegotiating their wages. They were jumping into other job opportunities that are willing to pay a lot more. Well, now over the last 12 months, over 200,000 tech jobs are let go. And so what's ultimately going to happen? A lot of these tech companies, they are going to start looking for new talent, probably at much lower prices, and considering probably outsourcing to other locations throughout the world, especially as they start reducing their office footprint. So I think we're going to start to see a lot of these high salary jobs no longer be offered and people negotiating their pay downward. Meanwhile, the cost of living is increasing. Everything is getting more expensive. So we could start to see people, maybe they realize, hey, I might have overpaid a lot more for this property. Even though my interest rate's 3%, I can't make the payments because I lost my job and I can't find a job that's suitable that's offering a similar salary.
Yeah, it's interesting you bring that up because we are seeing these big tech companies with these massive layoffs. And I wonder, I don't know if there's a correlation to this. Do you think there is that the advent of AI and, the AI explosion that's happening right now, is just a coincidence these layoffs happen? Is this just something going on in the economy, or does the AI play any part in this?
Yeah, AI. I think what's ultimately happening right now with AI is I think that it's so advanced and it's so much more than what the general public realizes. I think that they're just kind of giving us a small little speck as to what AI is, get people kind of excited and get them open-minded to it. But I think over the coming couple of years, they're going to start opening this up more and more and more. And there's going to be more and more jobs that are going to be lost to AI.
Yeah, the saying that Skynet has become self-aware. I'm terrified by the AI. What I try to tell my audience is like, let's find ways that we can make money and capitalize this, but at the same time, be aware of the dangers that this is going to take jobs. This is going to hurt people, and can be used by tyrannical governments for some type of dystopian world that we may be going into. But